There are no. So I hope everyone, my voice is clear and loud now, loud and clear.
Yes, yes, perfectly audible.
Okay, fine. Okay, fine. So basically, first we understand the concept of previous year and assessment year. So basically, this is the last year when you understand this concept, previous year and assessment year, because from this financial year 24-26, there are word tax year which is replaced in budget 2024. Budget 2025, so that is applicable for. We are here talked about financial year 24-25, which due date is 15 September 2025. I hope you all know that the return filing due date for 24-25 is 15th September 2025, which is already very much delayed because of so much changes in budget 2024 amendment. So here we are discussed amendment as well. So first we understand the concept of previous year and assessment year. So basically, year in which you earn income is the previous year. So here we talked about previous year 24-25. You earn income in 24-25 and you assess income in 25-26. So here we talked about year 24-25 and the income will be assessed in 25-26. So assessment year is year in which income will be assessed. So for 25-25, sorry, so 24-25 previous year, the assessment year is 25-26. But you may heard this word many times when you start filing income tax return previous year, assessment year. So it will quite possible you are confused, but please keep in mind that assessment year is year in which you assess your income. And here we are talked about assessment year 25-26 and previous year 24-25. So I hope you clear for this previous year and assessment year concept. But from next year onwards, you don't need to understand because there are tax year only. So that is for amendment part. This is not relevant for this ITR filing, but still I will, wherever possible, I will give the updates which is applicable in income tax code 2025. So it will be helpful for you future as well. So I hope you understand that. Next, we understand sources of income. So you know what, under income tax head, there are five sources of income. There are five sources of income. Majorly, income from salary, income. Wait, sorry for disturbance. So there are five sources of income. First is income from salary. So under income from salary, this is very helpful if you are start practicing in payslip, payroll. If you are start practicing in payroll portion, then it is very important to understand the concept of salary head provision. So basically, what is the major component of salary head? There are basic salary. If you want to, you can see a pay slip of any person who is employed in any company. Then you are able to see there are basic salary, there are HRA. You know what, there are HRA exemptions available in under income tax head. That's why majorly employer will majorly employer can so there are a major part of salary is a HRA, because there are a good amount of exemptions allowed in HRA. There are LTA. So what is the component of salary? Basic salary, HRA, dearness allowances, and there are some LTA allowances as well. So there, that is the major component of salary part. And also there are some person. So this is not only the salary you can get in monetary way. Any non-monetary benefit, any perquisite you received from that person is also part of your salary. Suppose any facility, if you are an employee in any company and you can get any a facility, like you can get a car for your personal purpose, office purpose. So if you get that, that is also part of your salary. If you get a free club access, free movie vouchers, or so many things, if you get free because of employee of that company, that is also part of salary. So that is also treated as salary, and that will be taxable under salary head. So I hope you understand the concept of salary, what is covered in salary, what are exemptions available in salary head. That is majorly HRA, LTA, there are exemptions cover in salary head. So I will give overview of this head. If you want to learn in detail, then we will take up another section in upcoming weeks. Okay. So next we understand income from house property. So if you own any house and you can and that house you can earn money on that house, that will be gone under income from house property. There are separate provisions for house property. There are separate deductions applicable under house property, where whatever required in income tax point of view, when you taxation of that, we will discuss. And ITR, practically understanding of ITR, we will discuss thoroughly all of these. So but I will give you, if you own any property, then there are provision under in house property head. You can take benefit of either maximum two house without any. So if you own more than two house, then deemed to be your house will be treated as a let out. Even that house is actually not let out, but that house is treated as let out as per income tax provision. We will discuss at the time of practical understanding, but I will give you overview that if you own more than two house, then if you own more than two house, then your all house will be treated as a let out property. So please keep it in mind. Even you are not giving on rent, that's also, and that is covered under house property. There are separate deductions allowed in house property head. So I will give you overview. Not possible to cover entirely, but I will give you overview about that. And next, you can understand income from business and profession. This is most important part of that sources of income. Business and profession, this is very wide and understanding. There are few deductions. You know what, we generally prepare financial statement, that is balance sheet, trading P&L balance sheet. We can prepare based on your accounting standard, or in DS, whatever for active whatever in whatever comply on your or in your organization. But under income tax act, there are separate provisions for deduction which is allowed in income tax act, which all this is covered in income from business and profession. So there are some separate rate for depreciation, under companies act or under accounting standard provision, which will applicable in all type of. We will discuss what type of different type of organization.
Hello.
But here I'm telling you that income from business and profession is like that. If you have a if you have a any business or profession running, then all the provision of this head, income from business or profession, will be applicable on you. So there are section 28 to 44 under income tax act. You have to comply with that section, and based on that your tax will be calculated. I hope you understand that. And next is income from capital gain. So if you own any capital asset like any land or building, or any equity any kind of share, equity shares, or any other type of shares, or mutual fund, or debentures. So whatever, if you own any type of capital asset, if you transfer that capital asset, then there are a detailed definition of transfer. Detailed definition of transfer under this income tax act. But generally we can say, when we sell that capital asset, then the capital gain will be applicable. That is short-term capital gain and long-term capital gain, which is based on holding of your capital asset. So this is and you know what, there are very big changes, especially in capital gain had in budget 2024, which impact on ITR filing in this 24-25. So this is very important to understand what are the new capital short-term capital gain rate, cash long-term capital gain rate. We will discuss in detail what is the majorly we will discuss changes which will if you don't understand that, then it will be very high chances your return will be treated as an invalid return, and you may suffer with huge penalty and losses. So please be aware of that, and we will discuss as simplify as possible with practical example. Okay. So next we can understand income from other sources. So this is the residual income. whether you, so like if you own any bank account, that like saving bank account, you can get interest from that. FD account, then you can get FD interest. Family pension received, if you receive family pension, that is also cover under income from other sources. Any gift received from other than relatives, or there are separate provision for that, also, which is dealing under section 56 of Income Tax Act. So there are separate provision for gift as well. If you received any free of any item you receive free of cost from other than relative, there are some exception. If you receive from relative, that is not treated as an income, but if you receive any other than relative, then it will be taxable on it. So you can keep it mind. So I hope you understand. There are five head. If you own any house property, if you own any bank, then the interest of that bank, FD interest, dividend income, and if you own any capital asset, then a sale of that is also part of your income. And income from business and profession, this is very common. I hope you understand that. And then income from house property, if you own any house property, and salary income. So these all are the five heads of income. If you miss anything, then your return will be treated as an invalid return, and that will be huge cost for it. So please keep in mind when you start filing a return. Please checklist for all the item. I hope you understand that much. And if any query, you can put in chat box. I will try to solve all the queries during the session. Okay. And next, we understand income tax slab. So, you know what? Either you are individual, HUF, or NRI. So there are two tax regime. Earlier it was only one, but from changes in budget 2020, I guess so. Budget 2020, a big changes. There are two separate tax regime: old tax regime and new tax regime. So there are, and we will discuss thoroughly what is covered in old tax regime, what is covered in new tax regime, and for which whom that will be applicable. So if you are individual, HUF, and NRI, then NRI is also taking benefit of slab rate taxation system. So please keep it in mind. If you are doing compliance for NRI, they are also take benefit of slab wise system. There are some exception over there, but commonly they can take benefit for that as well. So I hope you understand. And there are basic exemption limit. So under old tax regime, if you have only 2,50,000 income, then you don't need to pay any tax. And under new tax regime, and if you opt for new tax regime, then up to 3 lakh, you don't need to pay any taxes. So I hope you understand what is the basic exemption limit. But what is the important of that, we will discuss in later part with example. So your all doubt will be solved why 250 and 3, and why one person will choose 250 instead of 3 lakh, because there are so many things. Also, we have to sum up with so many things. So we will take a right decision whether opt for old tax regime, new tax regime. I will definitely clear all your doubts. So you will be able to you are able to get what regime is best for you, and how to take step first to choose which regime is most beneficial for you. Okay. So for that, now this is the old tax regime, this is all our old tax regime. What is the tax rate for slab wise? So here you can see that special rate for senior citizen and super senior citizen as well. Senior citizen is 60 to 80 age, and super senior citizen is 80 and above. So these all are the different rates for that. 250 to 2,50,000 to 3 lakh 5%. So you can see on the screen what is the different rate for that. Okay. And I hope you understand this. This is the rates of under old tax regime. Now we can see rate as per new tax regime. Also, there are provisions of MAT and AMT, which we will which we will understand in later part. But if you opt for new tax regime, then no need to pay any alternate AMT or MAT taxes. So what is the important of that? That is also we can understand when we when we move ahead, and then this provision will also understand. I will give you like I will give you a brief about that. That is, if your income, if you're after taking all the deduction as per Income Tax Act, and your income is your income after taking so many deduction which is available under Income Tax Act, actually that is not available as per accounting standard provisions or as per India's provisions, but as per Income Tax Act you will get that deductions. So after add back of that deductions, you will pay a certain amount of tax under MAT or AMT provision. When it will be applicable, we will understand in later part. So I will give you if you opt for new tax regime. So first benefit you will get if you opt for new tax regime, there are no provision for MAT or AMT. So keep it mind when we discuss in later part, that it will be helpful for you. Okay. Next is surcharge rate applicable for individual HUF and AOP, BOI, artificial judicial person. So this is all. Where are the common person? I will create a list. We will share this study material to you as well. Once the session will be complete, we will share this study material to you. So yes, Mr. Balaji, wait. Sorry, you are not able to see your PPT. Please confirm. Okay. Wait. What happened? I will check. I don't know. So please confirm. Can you watch? So please confirm. Is it PPT shown you? Please confirm. Okay, fine. Sorry. Okay, fine. Fine. Okay. So we will share this study material with you. Let's do one thing. I will go back to this. What is problem with this? I don't know. So these are rate under old tax regime, which we will discuss. You can see on the screen. I hope you now able to see that. I hope you are able to see that. Okay, so this is rate for old tax regime. There are three different rate for up to 60, above 60 and below 80, and 80 and above. There are three different rate under old tax regime, but under new tax regime, there are only single tax rate. There are no concession for senior citizen and super senior citizen. Sorry. So this is all rate for under new tax regime. So you can see that comparatively there are higher tax slab under new tax regime, which is beneficial if you opt for new tax regime. There are under old tax regime, you are able to if the rebate is not the rebate we will discuss later, but here we will see slab rate. So if you are off for old tax regime compared to new tax regime, the tax rate is comparatively low, and also slab wise range is also higher in new tax regime. So I hope you can understand that much. And this is the rate under old tax regime and new tax regime, and this is the surcharge rate. We will discuss in later part as well, in compare with rates as well, so you can check it check it out on that time. And also we will share study material with you as soon as possible. Okay. So surcharge rate is this, less than 50 lakh, no surcharge rate. whether you offer new tax regime or old tax regime, there are separate surcharge rate. You can see that surcharge rate is also comparatively lower in new tax regime. Okay. So, but under old tax regime, comparatively higher from new tax regime. So this is also changes in surcharge rate as well. So if your income is exceed these limit, then you have to pay surcharge on it. And so these all are the limit. So there are some exceptions as well, surcharge. So if you are, if you have a only long-term capital gain and listed equity units, and if your income is exceeding that, then the maximum cap on that amount is 15% only. If otherwise your surcharge rate is different, up to the under old tax regime it is 37%, and under new tax regime it is 25%. But if you have only long-term capital gain income or listed equity or a mutual fund units in long term, then the limit is capped at 15%. And also if you have a AOP, then also the limit will be changed. So this is all additional information, and you don't need worry about these tax rates and surcharge. That will be calculated automatically when you start when you filing your return. That is just I will give you a brief, and keep in mind that what is tax liability on you, but it will be calculated on income tax site or site as well. So you don't need to worry about that. I will give you just for a study point of view. Okay. So next is tax rate for partnership firm, LLP, company, and so this is there are separate tax rate for partnership firm, company. So partnership firm, there is a flat rate 30%. Whatever the income you earn, 30% will be tax liability. And if surcharge is applicable, what is the surcharge rate for partnership firm? We will discuss that as well. But there are 30% flat rate. There are no changes. If you earn 1 rupee, and if you have any partnership firm or LLP, then you have to pay 30% tax on it. There are no basic exemption limit under partnership firm. And same as well, Company Act, there are three different rate: 25%, 22% and 15%. So if your income in previous year 2022 23 does not exceed 2400 crore, then you are able to take benefit. So maximum company here we talked about is taking benefit of 25%, and the surcharge is applicable is add on it, but this is the 25% you can take benefit of, maximum company can take benefit of it. And there are also a different tax rate as well for companies to 15%. There are if you forego so many, and if you are incorporate in limited period time, then you can take benefit of that proportion as well. And this will we all discuss at the time of ITR 6. So I will give you just a brief that there are three different rates. There are some conditions. If you are taking benefit of that condition, then you will opt for that. So we will discuss in detail and when we understand ITR 6. But this is it for companies. Okay. And domestic company 35% over and above surcharge, and health and education says that is over and above from this. So this is all for partnership firm, company, LLP, foreign company. We will do all this. You see, there are the already mentioned is the when you are taking benefit of 15%, you have to forego your so many exemptions and deductions available under income tax provisions, and so many things. If you are if you are ready to forego, and if that is not part of your if you are not taking, actually you are not taking a benefit of that, then you are definitely go with, and it is that this is for limited period time. If you are incorporated in that period of time, that then only you can take the benefit. And at the time of ITR 6, we will understand all these in practically way, so you can get a clear picture. Okay. So this is for yesterday we will do ITR 5. Sorry, tomorrow we will do ITR 5, 6, and 7. Today we will cover till ITR 1, 2, 3, 4 in practical way. Yesterday we will cover all this ITR 5, 6, 7. We will discuss that how it will be when you can take benefit of these rate, and what is the things you will be forgo. So these all are the point you have to understand here. Tomorrow we will cover ITR 5, ITR 6, and ITR 7. For whom this is applicable, we will detail in later part. Okay. So this is for surcharge rate for domestic company. These are the rates for domestic company. You can see on the screen. I hope you are able to watch the screen. Okay. So these are the rate surcharge rate for domestic company. Different rate up more than 10 crore. So under Companies Act, there are comparatively lower rate for individual point of view, because they are slab by system and comparatively higher rate for them. So these all are rate for domestic company. These are all rate for partnership firm, LLP, local authority, and foreign company. So these all are rate you can see. And now deductions which are applicable to individual and HUF. So you have to understand that deductions which will allow under income tax act provisions will be for only for individual and HUF. Here we are talked about individual HUF, and today we are cover major part of individual and HUF. Mostly non-audited return will be by individual and HUF only. So this is more this is the major portion we have to understand because before understanding practical ITR 1 to ITR 4, we have to understand which reductions will be covered in old tax regime, and which reduction will in common in both the old tax and new tax regime, and how we can so this is very important to understand when you start filing your return and when you prepare documentation. Then this is important to understand which will be applicable under old tax regime. So if you opt for new tax regime, comparatively lower rate in new tax regime, then you have to forego these deductions. So what is these about deductions are these? So deductions means reduce your gross income, whatever is your income. If suppose your income is 10 lakh, and if you are able to take benefit of some deductions, then your income will be reduced. So result your tax will be reduced. So that part of tax will be reduced. So I hope you understand that what is deduction and what is the importance of deductions. So majorly deductions under section 80C, I hope you all know that 80C deduction, what cover in 80C. It is a huge list of investment options available under 80C deduction, like LIC, PPF, tuition fee, and there are also investment in certain schemes. So if you are investment and Sukanya Samriddhi scheme for especially for girl child. So there are one equity option as well, ELSS scheme. So if you are investing in that on that schemes, then you are able to take benefit of 80C. So that is, and there are maximum cap is 1.5 lakh. That is 1.5 lakh only. You are if you invest more, then invest more cover all these, the maximum cap is 1.5 lakh only. And there are most important one thing on 80 1B, that is for pension scheme. So if you are invested in 80 1B, that is covered in an NPS scheme, and then you can take benefit of additional 50,000. So 1.5 lakh 50,000, majorly you can take benefit of it from till last year. Old tax regime is comparatively lucrative, but after the so many changes, new tax regime is lucrative if you don't have any enough deductions and exemptions. And if you have enough deduction exemption, there are certain limits. We will discuss that as well. So if that limit is crossed, then you are take benefit of old tax regime. Otherwise, new tax regime is comparatively more lucrative for you. Okay, so 80C deduction is 80CC D1B deductions, and there are 80D for health insurance. I don't know what is problem. Problem है आज. Sorry, what is the problem? I don't know. What questions, sir? Wait for 5 minutes. So wait for 5 minutes. There are some technical glitch. I will get back to you after 5 minutes. So is it visible now?
Yes, perfectly audible.
Okay. So here now we will discuss about deductions which are applicable for individual and HUF. We will talk about 80C deduction, 80CCD 1B, 80D deductions. So 80C deduction is PPF, tax saving FD, tax saving mutual fund scheme. 80CCD 1B. If you are invest in tier 1 account of NPS scheme, then you can take additional 50,000 benefit. There are deduction under section 80D. Medical insurance premium, yeah, you can take benefit for 25,000 for yourself, 25,000 for your spouse, and 25,000 cumulatively you yourself and spouse and dependent children. The maximum cap is 25,000. That is insurance premium you pay for your family. This is the definition of your family, and 25,000 additionally for your parents you can get. And if your parents, or if you have, or yourself or your parents income is 60 years and above, then the limit will be increased to 50,000 instead of 25,000. So accordingly, whatever applicable in your case, or whatever insurance premium you already pay during the year 24-25, you can get benefit of 80 reduction. If you pay any insurance premium, then you can get benefit under section 80D. So till now we understand 80C 1.5 lakh, 80CCD 1B for NPS scheme, 80D insurance premium, and 80G, 80GG A, B, C. So 80G is basically donation. If you are donated some organization which is 80G registered, then there are separate 15%, 100%. Based on that, you can get benefit on 80G reductions, and political party donation, you can get benefit of that as well. So these all are the major. Uh, I hope my voice is clear. Or wait, see. Okay, fine. Okay, fine, fine. So these all are the deductions allow under old tax regime. Okay. So now So now, I hope you understand what are the deductions allowed under old tax regime. What are deduction allowed in new tax regime? There are majorly four deduction which is allowed in both the regime. That is covered in later part. But so we will discuss on that. But these all are the deduction which is allowed in old tax regime specially. So if you opt for old tax regime, then you can get benefit of these all are deductions. So if you are not taking benefit of it, so you have to do one thing before start filing your return. Please keep a note that if you are invest in something in like if you are paying any LIC premium or 80C deductions, investments options, or any insurance, medical insurance premium or pension scheme. So if these are all are applicable in your case, then prepare a list accordingly, and based on that you can decide. We will discuss how to decide. Okay. So this is a tax deducted at source. So basically, what is the tax deducted at source? This is most important if you are in a business and profession income. If you don't have business and profession income, then there are no need of then sorry, that is then there are no sorry. Tax deducted at source is if you deduct TDS, then it's required for business and profession. But if you are a salaried person, so under salary head, based on your slab rate, there are tax will be deducted by your employer. So, and if you think that already my employer deducted, then there are no need of filing your income tax return. It will be a huge, it will be sometime it will be a refund option available for you or your client, whatever you are taking advice for that. So if you and under solid, so there are so many sections when TDS is required. As a business point of view, we can understand what is the TDS. So if you are a businessman and if you are paying someone, like if you pay for salary, if you pay for interest, if you pay for commission, if you pay for any if you taking any contract from someone, then if you pay to contractor, pay to any professionals. So if you pay anything, you can see expense side of your we can see P&L. So whatever in your expense side, there are liability to pay TDS according to income tax provision. You have to detail understanding of that. What TDS is applicable in what case? If you have a salaried person, if you own, so if you are employer, if you have any employee and you pay employee, then according to income tax provision, you have to deduct TDS on it and timely deposit on it. For that, you have to apply for 10 number. I hope you all know that how to apply 10 number, and accordingly you can pay the timely deposit whatever amount you deduct from salary of that person. You have to deposit timely to government within a time limit, seventh day of month, whatever the time limit in TDS provisions. You can keep it in mind. So these all are the, I will just give you overview. I know that there are time constraint, we are not taking all part of TDS, but I'm just giving you brief that it is for your understanding. Then you start filing your return, you have to check all these things. If you are any amount with any expense side, you did not there you have liability to deduct TDS and you are not deducting TDS, it will be a huge cost for you. Otherwise, if you pay, it may chances your return will be treated as invalid. So please keep in mind when you start filing return, check whether TDS liability will be comply. Otherwise, you can do it right now. Okay. So I hope you understand that much. So these are TDS. So basically, whatever TDS deducted already. So these all are a business point of view. So if you are a salaried person, your employer can deduct TDS. Employer can deduct TDS. It will be treated as an advance. It's same way like advance. Similar, so that is your liability to pay tax, but your employer is already paid not tax on it. So that's why you don't need to pay tax again, and the employer will pay tax on it. Okay. So this is all for employee perspective. If you are a salaried person, and if you have income from any other sources like interest income and some other income like lottery and anything, so DDS will be applicable, and these all are treated as your advance tax, like advance tax. And same way, there are TDS will be deducted, and TDS always deducted by payer for pay. So, and that is liability for payer to deduct TDS. Okay. Same way, advance tax. So whatever is your tax liability as per Income Tax Act, after considering TDS, if your tax liability is more than 10,000, so if you have to pay advance tax quarterly, there are limits of that. So you can comply as per income tax, you can comply for that rate. If you do not comply, then interest will be applicable under section 234 of Income Tax Act. So you provisionally you can prepare a sheet how much tax liability it will be. Like suppose you are under tax under a 30% tax lien, and yes, you will get this study material. After completing this session, we will definitely provide all this study material. So don't need to worry about that. You will definitely get this study material. Okay. So advanced tax is basically whatever you 10,000, if whatever the TDS is already deducted by payer, and after that, if your tax liability is 10,000 and more, then you have to pay advance tax. And advance tax is pay quarterly. There are limit already decided under Income Tax Act, and accordingly you can pay advance tax. Advance tax apply to all taxpayer, whether you are a salaried into individuals, freelancers, businesses, or senior citizen who do not have income from any business or profession during the financial year. So or but there are a separate for presumptive taxation scheme. What is that presumptive taxation scheme? 44AD and 44A. This will also we will discuss in later part. There are separate sheet for that as well. So we will discuss. There are separate. If you are offered 44AD and 44A, then then you have a single date before 15th March, you have to pay some advance tax, what is applicable on your case. This is all are you have understand the concept of advance tax. So if your tax liability, we will take an example of interest, that if you are in a 30% slab, like if you are a salaried person and already your income under 30% slab, and yeah, and the TDS deducted on interest portion is just 10%. So remaining 20%, that is actually huge. If you have a FD of a lakhs of rupees, so that will be cost around 5, 4, 5, whatever amount of 3, 4, 5 lakh rupees in interest you will get. And so for suppose 4 lakh, 4 lakh 20% is a huge 80,000 rupees tax liability will be on you. So if you are do not pay tax on it, and then you have to, then at the time of ITR filing, you have to pay along with the interest, and along with interest. So you can keep it mind that advance tax liability is also keep it mind before filing your return. You can pay, you can keep record of all these advance tax date. So I hope you understand that what is the importance of advance tax. See, there are advance tax due dates. So you can see on the screen. So these all are the date for advance tax: on or before 15 January, on or before 15 September, on or before 15 September 2025. So these all are due dates. You can keep it mind accordingly. How to Then the next question comes in your mind: how can we calculate our advance tax? It's like you have to go on income tax portal. There are income tax calculator. You have to feed basic information as per provisionally how much amount, how much income you have. Based on that, the amount will be shown over there. Even you can calculate advance tax there as well. They will give the amount and number as well. So we will see how to go income tax calculator. You can find on a income tax portal. Okay. Now standard deduction. Standard deduction is specially for salaried person. This is only for salaried person. If you are a salaried person, then a special standard deduction allowed. On your case, under new tax regime, it is 75,000. Under old tax regime, it is 50,000. So this is all part of understanding which regime is most important for you, old tax regime or new tax regime. Now we can understand rebate for resident individual under section 87A. So this rebate is only if you are a resident individual under whatever is the rebate available under section 87A. That is only for resident individuals. So if you are a resident individuals, and if your income for financial year 24-25 or previous year 24-25 or assessment year 25-26 all are the same, then that up to 7 lakh and 75,000 additionally rebate. So you can understand that if you're a salaried person and your income is 7.75 lakh, salaried person. Other than salaried person, the limit is 7 lakh only. But if you are a salaried person, then 7.75 lakh if your income, then you don't need to pay any tax, don't need to think about any deductions or exemptions. These all are basic, these all are like no need to take benefit of any deduction or exemptions. Otherwise, if you have you don't need to think about that. Straight away go for new tax regime. It is anyway beneficial for you. So these are very good benefit. That's why so many people now go for a new tax regime. And so this is very important to understand that this is the rate. And the good news is that this rate will be increased to 12 lakh from financial year 25-26, or we can say tax year 25-26. This rate will be increased to 12 lakh. So up to 12 lakh plus rebate benefit. So you if you are a salary person, 12 lakh 75,000, you don't need to pay any single tax. So that is really good news for a small taxpayers. And this all are rebate under old tax regime. So under old tax regime, up to 5 lakh, you don't need to pay any. So after considering deduction and exemption, which is available in old tax regime, majorly deduction and exemptions available in old tax regime, very few deduction and deduction benefit under new tax regime, which is very low percentage of person can take benefit. Actually, this is that all are odd one. that common people not can get benefit of that. Very few person can take benefit of that deductions available under new tax regime. We will discuss that as well, but as a common point of view, that is not more relevant. Okay, so under new old tax regime, up to 5 lakh, if you are after considering deduction and exemptions, your income is up to 5 lakh, no need to pay any tax. For resident individuals, there are rebate is available under section 87A. I hope you understand that. And now we can see this is important income tax calculator. Go on income tax portal, then click on income tax calculator, feed the basic and feed the basic information like deductions and exemption before claiming old tax regime benefit. Sorry, income before claiming deductions and exemption under old tax regime, and deduction and exemption available under old tax regime. After then, you can get result what the tax as per new tax regime, tax as per old tax regime. So you don't need, you do one thing before start filing your return, or before choosing these new tax regime versus old tax regime. You have to prepare a list of deduction and exemptions applicable in your case. We will see already common list, so prepare a sheet of list and add on that. Then go to income tax calculator and feed the before deduction exemption what is amount of your income, and after that you can option for feed deduction exemption available under old tax regime. Then click on calculate tax. You will get the result which is more beneficial for you. You can take benefit of it. Automatically calculate all the rates which will be here. We see rate as per old tax regime, rate as per new tax regime. I hope you understand that. So there are 7 income tax return, ITR 1 to ITR 7. We already told you that, and we discuss all the ITR in practically, and today we cover ITR 1 to ITR 4. So we'll begin very soon. I will just create a foundation for you. So when you start filing your return, you have clear some concept which regime is beneficial for you, which tax return is applicable on what person, which type of source of which different type of source of income, and what type of ITR form applicable on that. So generally the due date is 31st July for non-audit cases, but as we all know that due date is extended till 15th September 2025. There are so many changes in ITR forms, and still the form will be so many errors and issues while you file your income tax return. But still that we try to do that as early as possible. Okay, to fix that. Okay, so what is the document you have to prepare before start filing your income tax return? For salaried person, form 1626 AS. If you are claiming for HRA exemptions, then rent receipt, pay slip, investment under section 80C, 80, 80D, whatever applicable in your case, you can ready with at the time of filing your start filing your income tax return. For capital gain, if you have any equity shares holding, then ELS statement and demat account statement, mutual fund statement, sale and purchase of all equity debt funds, purchase and selling of any house, registration detail of any house property sold. So these all are details and documentation which you have to liable for pay pay capital gain tax, short term or long term. You have to be ready with all these documents. When you start filing your return, you need to know what is purchase price, what is sale price. Based on that, what is your capital gain. So based on that, you can ready with all these documents for capital gain. So house property, there are some additional detail. Here we can see there are PAN card detail, co-owner detail, who is the co-owner of that property, and address of that property, home loan interest, any home loan on that property, and you can take benefit of home loan. Then also you can interest certificate of that home loan. And if you have any other sources income, then FD, bank FD details, bank statement, detail of interest received from bank saving accounts or corporate bonds. And for financial, for business and profession, you have to ready with financial statement like trial balance, trading P&L, balance sheet. All these you have to ready with when you start filing your income tax return. I hope you understand these all are document required when you start filing your return based on different source of income. Okay, so now what is the common mistake will when you start filing your return? Non-reporting all income, we already discussed there are 5 heads of income. If you don't report, if you not reporting all type of income, if you not consider income, I'll already give you overview about that. All these heads like house property head, even you not give let out or that property, all properties are self-occupied, but you own more than 2 house property, then one house property will be deemed to let out as per provision. So you have to be keep in mind, you as per income tax law, whatever tax liability will be on all the heads of income, you can consider all that and double check all the before filing. You can double check all these things. Okay. Wrong selection of ITR form. Different ITR form is applicable for different person. Which form is which applicable on which person, we will discuss that as well. But these all are common mistake we will do when we filing income tax return. Missing deductions or tedious details. To avoid these, taxpayer should verify from. So how to avoid this? We know these all are mistakes. We will either be missing deductions or TDS will be deducted. Your wrong selection of item form, not reporting on all income. For avoid these, we will do one thing. Download 26 before start filing. You can do one thing. Go to income tax portal. Use your login credentials, and there are options for download 26AS and AIS. Download all these and download 26AS and AIS, and then match with all declare income, all document we will discuss already document. So match these from all document we already have with 26A and AIS. Any difference between them can confirm with another party, which that income will be shown in 26AS or AIS. Then you can confirm. You don't have document, but that income will be shown in your AIS or 26AS. There are huge chances, there are some problem on it. So you have to be confirm or check it out once before filing a return, because there are huge chances if there are some difference between 26AS and AIS, your return will be treated as invalid and it will be huge cost on it. So please keep it in mind. So we already know that, we already understand that is what is the due date of this return, and a different ITR form is applicable, and which form is applicable we will discuss in later part. And this is all steps you have to follow before start filing. You have to be keep in mind that which regime you have opt, which ITR form will be applicable, what are the deduction and exemptions in your case. And here you can see the deductions and exemption which is available in both the regime. Either you go for an old tax regime or new tax regime. So deduction under section 80 double J double A. What is 80 double J double A? 80 double J double A especially is if you hire new, there are some special deduction for a manufacturing unit. If hire new employee, a certain percentage of new employee hire, then you can get an additional benefit of that employee cost. Suppose you hire for hire 100 new employee, okay, with 100 new employee, and their per month income is 20,000. So 20,000 into 12, 2,40,000, 2,40,000, 22 lakh 40, 2,40,000. So 10 employee to 24 lakh. 24 lakh multiply 30%. So that is your deduction you will get in under this deduction under section 80 double J 80 double A. You can check it out this section. So if it is applicable only on a manufacturing unit, it's not applicable on everyone. So if you are a manufacturing unit and if you hire new employee, then you can take benefit. If you hire new employee for this is all for a this is all, there are also a new thing will become in every day to day basis. If you check it out, we will already consider in our sessions as well that there are many benefits for employment creation, for job opportunities government can take. So this is all the part of that only. So if you create new employment creation, this is all deduction you will get. If you employ create, you hire new employee, then you can get benefit of that deductions. So this is very huge. If it is applicable in your case, then you can take benefit. It's not commonly applicable for all, but it is applicable in your case. Then this is allow if you are offered new tax regime as well. And next is employer contribution on pension scheme under section 80 CCD2. So employer contribution under this section, if your employer contribute in this section, This is especially earlier it was only for government employee, but now private employee can also take benefit of it. If your employer contribute for your pension scheme, then you can take benefit of whether you go for any regime, old or new, you can take benefit of this as well. And Agniveer Corpus Fund is, this is also for special community. And deduction on interest on let out property. So if your property is let out, not self occupied, if your property is let out, then interest of that is available in both the regime, whether you opt for old tax regime or new tax regime. You know the what deduction on self-occupied property is the maximum 2 lakh. So on that is available only in old tax regime. If you are off for new tax regime, that 2 lakh is gone. You don't able to get a 2 lakh deduction. That is for self-occupied property. So these four deductions and exemptions will be available in whether you choose which regime, old tax regime or new tax regime. This is especially for individual HUF. You have understand that these four are full for our item. If it is if anyone is covered in your case, then keep it in mind. Otherwise, you can completely ignore that. Okay. So based on list of deductions, and we will already see that how we can. So these are now we can cover what deduction and exemption in both the regime, deduction and exemption in old tax regime, and based on that, so available in both the regime, you can consider in gross total income, and then after you can then you can go to common for old tax regime and then calculate tax. Then you can get a result of which is more beneficial for you in income tax portal, income tax calculator. Do that. You can definitely definitely compare which is more beneficial for you. So I hope you understand, and I hope your all doubt related to this is clear, that how to choose old tax regime versus new tax regime. Okay. So any doubt related to that, you can have ways of to choose between old tax regime and new tax regime. This is very important and very crucial when we start filing your return, and this is create very confusion many of times. So I hope your doubt will be cleared now. And now we can discuss. And if any doubt, you can put in chat box. We will definitely cover in session, so everyone can get benefit of it. So now we will discuss the most important part, the key changes in capital gain taxation. You know what? 23rd July 2024 is, it's a very important date for a, there are so many changes in capital gain, had short-term capital gain or long-term capital gain, or also unlisted bonds and equity. So many changes, and we have to especially understand that the remaining changes we will discuss at the time of practical of income tax return filing process. But this is very important. That's why I will keep separately as well. So it will be helpful for you when you take when you read this study material letter part. Then it is actually helpful for you as well. So please wait a minute. No, sir. Standard deduction for old tax regime is 50,000 and new tax regime is 75,000. So basically, Mr. Paras Kumar is asking standard deduction for old tax and new tax regime is same, not. No, so this is not same. For old tax regime, it is 50,000, and for new tax regime, it is 75,000. I hope your doubt will be clear. Uh, And you can see in this study material as well, we will cover all these in study material as well. So you can read it next, and also you can get a recording of this session as well. So it will be helpful for you as a letter part as well. So what is the key changes? I already told you this is very much important to understand that. So what is the long-term capital asset and what is the short-term capital asset? So long-term means, first, especially for listed asset, if hold more than 12 months, then it is treated as a long term. Otherwise, it is treated as a short term. Other asset like property, gold, unlisted share, long term if hold 25 months. And you know what? There are changes in before 23rd July. If you transfer before 23rd July, there are changes in earlier. If you are hold more than 36 months, then it is treated as a long term other asset, for other asset. But now the limit will be changed for 24 months. If you hold more than 24 months, then it is treated as a long-term capital asset for other assets, not for listed assets. There are no changes in listed assets for holding period, but other asset there are changes. 30 earlier it was 36 months, and now it is 24 months. So you have to be understand that it is important for you if your the crunch that due that we can say cutoff date is 23rd July 2024. So before 23rd July, holding period is different. On and after 24th July, holding period is different. So when you filing your return, then there are separate parts. You have to be mentioned clearly when will transfer your asset. Based on date of transfer, your rate will be calculated, your holding period will be calculated. So I hope you understand that. And long-term capital gain on or after 23rd July. So here we can do one thing, like we will first we understand on or after what is the rate. Before 23rd July, what is rate for long-term, then short-term. Okay. So long-term on or after 23rd July, all asset except unlisted bonds and debentures. So if you are own any listed equity, then 12 months is a 12 holding more than 12 months, it is treated as a long-term capital gain. And so here, one thing you have to be clear, earlier it was a different rate, but now whether you have any asset, whether it is listed equity, unlisted equity, if it is treated based on holding period, it is treated as a long-term capital asset, then rate is a 12.5%. There are said earlier it was an indexation. Now indexation is a completely gone. After on and after 23rd July 2024, you are not taking benefit of indexation. There are few exception which will be discussed when this exception will be available, but generally we can say indexation is no more. So no indexation available whether you have any kind of asset, whether it's equity, whether it's property, gold, unlisted share, whatever, the indexation benefit has gone completely. And that is also increased exemptions, and there are also a big changes in this part as well. Listed equity share and equity mutual fund gain up to 1.5 lakh, 1.25 lakh. In excess of any amount, you have to pay 12.5%. So there are big changes in ITR 1 and ITR 4. ITR 1 and ITR 4 is the basically simplest ITR 4. Yeah, today we are talked about ITR 1 to ITR 4, which is especially for individual and HUF. So ITR 1 and ITR 4 is comparatively simple ITR form. And earlier ITR 1 eligibility criteria of ITR 1 and ITR 4, even if you earn a single rupee of capital gain, you don't allow to choose that ITR 1 and ITR 4. You can opt for ITR 2 or ITR 3, whichever applicable in your case. But now it is allowable if you have only long-term capital gain from equity share and equity mutual fund up to 1.25 lakh. No liability to pay tax, that is completely exempted. Up to this amount, you don't have any other capital, whether it is short, you hold any shares, that's not any problem. If you are as a long-term investor, hold that is not an issue. If you transfer any asset, any equity shares or any other thing which is other than listed equity share and equity mutual fund long term, then you are off for ITR 2 and ITR 3. ITR 1 and ITR 4 is not applicable. And okay, I will give you just this is just for your knowledge perspective. We will see in a later part as well. Okay. And next we can see that land and building acquired before 23rd July 2024, holding period option. Wait. So land and building acquired before 23rd July 2024, 20 option to choose. So whatever land and building, we will discuss here about on or after 23rd July 20. So this is the part we have to understand, that land and building, if acquired before 23rd July 2024 month and hold more than 24 months. Earlier it was like hold 36 months, but now it is for 24 months. If you hold more than 24 months, then if you are able to take, there are the certain you can see that if you are a resident individual or HUF selling land and building acquired before 23rd July 2024 and the new 12.5% tax exceed the old 20% with indexation, you can opt for lower tax. So you have option to choose between whether you go for 12.5% or with indexation benefit 12-20%, which is more beneficial for you only if you are resident individual or HUF. Other than that, if you are other than resident NRI, if you are a other than individual and HUF, any other person not can get benefit of this. Only resident, individual, and HUF on only land and building, jewelry, anything else not allowed. Only land and building. This is especially for land and building. I hope this is very much clear. That is for where the exception of indexation will be still allowed. Otherwise, indexation is no more. I hope this is clear for you. Okay. Before 23rd July, what is the rate? You can see listed equity share and equity funds 10%. Before 23rd July, it was rate. Real estate 20%. For that, indexation will be allowed. Unlisted share bonds 20%. Now you can see unlisted bonds and debenture before 23rd July 2024. Holding period is 36 months and more. Then it is treated as a long-term capital gain. You have to pay 20% tax on that. But now, regardless of your holding, on and after 23rd July 2024, if you hold any unlisted bonds and debenture, that is treated as a short-term capital gain. You have to be taxed at the individual slab rate. Whatever slab rate is applicable in your case, you have to pay on that. If you are with the 30% slab, you have to straight away pay tax on 30%. No 20% will be applicable in your case on and after 23rd July 2024. So it is very important for capital gain point of view. There are so many changes. That's why I can separately mention all these things. So you have to get a better clarity on that. So these all are the changes, which is you have to understand that indexation benefit is be removed completely. This may increase tax liability for asset with the modest appreciation. I hope you understand that. And there are, this is set short-term capital gain. So listed equity shares, if it is if you hold below 12 lakh, below 12 months, then it is treated as a listed short-term capital gain. Then before 23rd July, rate will be 15%. On and after 23rd July, rate will be 20%. And other asset, if it is a short-term capital gain, hold on or after 23rd July, hold more than 24 month below 24 month, then it is treated as a individual tax slab. Okay, I hope you understand that. And you know what? There are also big changes and deduction and exemption. That's why I can keep it here. Like earlier, whatever deductions you can claim, you don't need to, you just put the numbers. You don't need to any additional document require or any additional reporting require. But this is, you can see, this is all the changes. Now, if you're claiming for HRA exemptions, you have to be feed. These all are basic. These are the additional information you have to, before filing a return, you have to feed all the basic, all the requirement of these: place of work, basic salary, actual HRA received, rent paid. For same home loan, if you are claiming for home loan interest, if you own any self-occupied property and claiming home loan interest on that, or a let out property, whatever type of property, and create, if you are taking benefit of home loan interest, then loan source, account number, sanction date, these all are additional reporting require from after budget 2024 amendment. So these all our point will be, so before start filing your income tax return, you have to be ready with all these details and documentation. So it will be easy for you when you start filing your income tax return. So I hope you can understand these all are commonly for all ITR forms. I will try to cover maximum part. And now we can understand ITR 1 point of view, what is the requirement. And after the understanding of that, we will practically, so what we will do now, we will first we understand theory part of ITR 1, and then we can then we can practically understand each ITR. Accordingly, we can cover all ITR 1 to ITR 4 today. Then tomorrow we will cover ITR 5, ITR 6, and ITR 7. So that's why first we do theory part, and then I will do practical for ITR 1, and accordingly ITR 2, ITR 3, and ITR 4, we will do that. Okay. So for ITR 1, income tax return form, first we have to, still now we don't know which ITR form applicable on what on whom. So first we have to understand that ITR 1 specially for applicable for only resident individuals, and there are certain conditions you have to fulfill that conditions. We will discuss in later part, but here you can see that only salary income, only house property income, and other sources income, and long-term capital gain under section 112A. We will already discuss that long-term capital gain from equity shares and equity-oriented mutual fund up to 1.5 5 lakh, which is totally exemption, then ITR will for one is allowed. Earlier, it was not allowed. If you have a single rupee of whether it is long term or short term, whatever, you don't able to choose that ITR one. You have to go with ITR two or ITR three, whatever applicable in your case. But now ITR one, this is concession available, because it is very simple form. It is 2-page form. You can it will take hardly 10 minutes to complete these form. If you all documentation is ready, you will file income tax return very quickly. So that's why. But for benefit of major taxpayers, that is why this is come up in picture. So please keep it in mind. So if you are a resident individual, salaried person, or so this is applicable on you. And most importantly, you don't have any business or profession. So ITR one and ITR two, especially for uh, if you don't have any business and professional income. ITR one is very strict. If you are able to eligible for that, then you can offer that. And there are separate eligibility criteria. If it is applicable in your case, then you can definitely choose ITR one only. Otherwise, you can choose ITR one if you don't have business and profession income. If you have business and profession income, then you can opt individual and HUF. I will talk about here for individual and HUF. So ITR 3 and ITR 4 for individual and HUF. For if you have a so basically, what is that? ITR 4 is especially if you are off for presumptive taxation scheme. What is presumptive taxation scheme? Presumptive taxation scheme means this is especially for in 44 AD for businessmen and 44 ADA for professionals. So if you are businessman and your turnover is up to certain limit, you don't need to you don't want to maintain proper books of account. You straight away declare your profit based on your turnover. You can declare a fixed percentage of profit will be declared, and you don't need to maintain proper books of account. So that is so that's why you don't need to you don't need to proper all these the trading, P&L, balance sheet, and so many things, whether it is allowable, this deduction allow, this deduction not allow. You don't need to take headache of all this. Then you straight away go for that and take fixed percentage of this is already mentioned in income tax provision. You have to straight away choose straight away that percentage of profit will be declared. And same, this is for business person and for professional as well. So for business person, if your income is up to 2 lakh, and 8% of profit will be declared. There are also some additional condition where limit will be increased to 3 crore, and also 6% of your profit will be treated as a 44 AD for persons. But this is all additional conditions require if you have 95% or more from your digital transactions. You are dealing majorly with digital transactions. There are so many business nowadays will deal completely on digitally. There are no cash transactions. So then then it is allowable. So you will take benefit of that as well. So if it is so you will understand that if it is that in your case, then limit will increase to 3 crore, and also percentage of profit declaration will be reduced to 6%. So if it is applicable in your case, and it is always advisable to do go, because you don't need to headache to proper books of account maintain. Then you can go for ITR 4, and otherwise you will go for ITR 3. So these all are, and ITR 4 is specially for individual and HUF. And also, you know what? A partnership firm, not LLP. Partnership firm also take benefit of ITR 4 if they want to declare profit as per presumptive taxation scheme. So this is for ITR 1, ITR 2, and ITR 3, and ITR 4. So I hope you understand for whom which is applicable: ITR 1, ITR 2, and ITR 3, and ITR 4. Okay. And ITR 5 for LLPs, partnership firm, ITR 6, AOP, BOI, they are taking benefit of ITR 5, and companies is taking ITR 6, trust institution, ITR 7. So say there are pass-through entities which will be taken benefit of ITR 7, pass-through entities like InVITs, RVITs, like real estate deal with, there are no tax liability for themselves, all will be gone to their investors. So you have to understand that all are treated exempted under section 11. That's why and also Companies Act, NGO registered under section 8 of Companies Act, that is also covered under ITR 7. And for NRI, you have to choose either ITR 2 or ITR 3. For NRI, this is applicable ITR 2, ITR 2, ITR 3. If they don't have any business profession income, then choose for ITR 2. And if they have a business and profession income, then compulsorily ITR 3, because ITR 4 is especially for resident individual, HUF and partnership firm. So I hope you understand that which ITR form is applicable on whom. So these all are special tips when you file your return. Choose the correct ITR form, collect necessary documents, fill out necessary personal details like PAN. You can already know these all are detailed already in. You can just double check that when you start filing your return. If any changes in anything, then you can update that as well. Report all income, claim all exemptions, calculate tax liability, verify. So prerequisite before filing income tax return, you have all these things: user ID, password, stay PAN is active, Aadhaar PAN is linked. If your Aadhaar and PAN is not linked, then you have to pay tax on it before filing your return. That is very much important. You have to understand that PAN and Aadhaar link. If your PAN and Aadhaar is not linked, then as early as possible, pay tax on it and before start filing your income tax return. Valid mobile number linked with Aadhaar, pre-validate at least one bank account and nominate. So check it out. If at least one bank will be pre-validated and nominated for refund, and that bank is nominated for refund. So if you, this is also important. There are some time you can get message after filing your return that your bank is not pre-validated, so we are not able to refund your amount. So please validate it. So this is very important. Before filing your return, you can check whether any of the bank will be pre-validated or not. So I hope you understand that. Now we can think about that. Practical understanding of what is head of income will be covered in the ITR, ITR 1. So salary income, you have salary income, house property income, only one house. If you own more than one house, then you are not able to choose ITR 1. Income from capital gain, only long-term capital gain from equity-oriented mutual fund or equity shares, 1.5 lakh. You have otherwise you are not able to take benefit of it. And income from other sources, interest, dividend, rent, majorly income majorly match with 20. So that's for that you have to be matched with 26 years, where you can match all these. You can see there are all the detail before filing. You can see that you have to match with. We already discussed all these things. Form 16, get a form 16 from your employer, and then 26 AS, AIS, or you can all match for salary point of view, and also 26 AS point of view. You can match all these things. Okay, I hope you understand that. Income tax calculator, we will already discuss that. What is eligibility criteria? It is very important. You have to be see on the screen that only resident individual, ITR 1. Here we talked about ITR 1. Resident individuals, total income up to 50 lakh, income from salary, one house property, other sources income, and long-term capital gain up to 1.25 lakh under section 112A, and agriculture income up to 5,000. If you are agriculture income more than 5,000, then you are not able to take benefit of this agriculture income. So sorry, it's the ITR 1. So you are either opt for ITR 2 or ITR 3. The ITR 1 is ITR 1 and ITR 4. The remaining criteria of ITR 1 and ITR 4 is same. Only ITR 4 is applicable for business and profession head as well. But this is not, and ITR 1 is other than business and profession income you have, then you can choose for the rest of the eligibility criteria for ITR 1 and ITR 4 is the same. So not eligible if such individual is director in company holding unlisted share, foreign assets, income, signing authority outside India, capital gain, carry forward losses other than long-term capital gain. So you can see if you are individual is director in company holding unlisted shares, if you hold any unlisted share, if you have any foreign assets or signing authority outside India. So these are complete list. You can check if it is applicable in your case. If your income is more than 50 lakh, you can, if you are a salaried person, you are not able to file ITR 1, you can go with ITR 2 only if you don't have business and profession income. If you go get ESOP from your employee, then you are not able to take ITR 1. So these all are what is the eligible and what is not eligible. Income from lottery, race houses, legal gambling, that is also out of the purview of ITR 1. Then that also you are not take benefit of that as well. So I hope you understand. Such resident it is not partner in partnership receive anything from partnership firm is treated. So if you are a partner in any part, if you are partner in partnership firm, then also that income is treated as a business income. So that then also, if you are a partner in partnership firm, then that is, you don't run any business, but actually you are a sleeping partner. Still, that is the any amount received from partnership firm, and that is why that is it is a business and profession income, and you are not able to offer ITR 1 and ITR 4. I hope you understand that. So these all are amendment. These are high value. So sometimes your income is below basic exemption limit. Still, you have to file your uh, so sometimes what happen is like, your income is below exemption limit for long term, sorry, for old tax regime it is 2.5 lakh, for new tax regime it is 3 lakh. But you have to file your income tax return because of these high value transaction. You may see there are some person who get noticed because of this high value transactions. So if any kind of high value transaction during the year, and yeah, this is all reflected, you can see, then choose that at the time of ITR filing. You have to choose that. Because of that reason, you have to file your income tax return compulsorily. Even if your income is below exemption limit, then no need to file income tax return. But these all are example of high value transaction. It may chances you can get a notice. You do not file your income tax return, and then you can get notice of that. Because of that reason, you are not filing your return. Then you have to pay penalty and interest on the pay fine penalty, whatever applicable in you have to pay that, and after that you have to file your income tax return. So to avoid that, you can check it out. Income from foreign asset, any expenditure on travel exceeding two, like you don't have any income but you have expenditure on travel, it is already because of all the departments will be exchange their information. Based on that, government will get all the information. Electricity of more than pay electricity bill more than 1 lakh, TDS and TCS exceeding 25,000, TDS will be deducted on your PAN number. Then you have to be, whether your income is below exemption limit, considering all this, still you have to be filing from sales turnover of more than 60 lakh. Your income is below limit that, but still you have to, these all are the example. You have to keep in mind. Saving account, bank account deposit more than 50 lakh. So these all are things you have to be keep in mind. Bank deposit exceeding 1 crore. So these all are for ITR 1 basic start. When you start filing practically, before that we have to understand that. I hope you are clearly understand what is this. Till now you have to understand any query regarding the common discussion and ITR 1 point of view, and then we can proceed for practical part. Any query you can put in chat box. Otherwise, what we will do, we will take uh, break for 5 minutes. This is time for 5:34. We will meet around 5:40. Is it okay for you? We'll take break or we'll continue. Please put in chat box. Okay. Okay, we'll meet around 5:40. Okay. 5:40 we will resume and we will start practical filing of ITR 1. Okay. And any doubt you can put in chat box. We will discuss. So let's resume. Let's resume, everyone. Please put on chat. Let's start. What are in the screen? Can you please confirm it? It is. So what is it screen is looking screen? Are you able to watch a screen? Yes, okay, fine. It is ITR form open. So now we can start from ITR 1 practical understanding. You have option. Either you can go for so there are two of the three option available. Either you can file income tax return through online form. You can go income tax portal, use your login credentials, and then select ITR form, and you can file over from there. And the second option, Excel utility. You can download Excel utility, feed that form, and for that first you have to do import. Click on the import pre-fill. So what import when you import pre-fill, then for from your login credentials you can get basic information which is already on your system, already added in your system. Wait, what? What are you trying to say? Mostly software. Please elaborate. I don't understand. I think one query is remaining. Sorry, what was that? Form financial year 23-24, all serial file select. So no, basically, if you are off for first, I have to be cleared. One person is what is her name? That V. Loganathan. So if you are asking that in financial year 23-24, you can opt for old scheme and you can file that to an IEA. And now you can again choose the old regime. Then you don't need to fill that form. What you are if you are choose for new tax regime now for 25-25, then you can file that form. Otherwise, you are not required to file that form. That is for indefinite period. Now, when you are choose for again you choose old tax regime to new tax regime, then you are you have to require to file that form. I hope your doubt will be clear. What is okay, fine. So okay, let's begin the ITR 1 form. What is in it? So first we will do that. We will using through Excel utility. First you can do the one thing. Import, click on the import pre-fill and information like first name, middle name, PAN number, your address already mentioned in your IT portal. So that already fetch from from there, and all detail will be filled. So you can do that when you download Excel. If you want to do with Excel utility, then you can do it like this. Otherwise, you can go on income tax portal and file online. Then automatically all detail will be available there. First name, middle name. You don't need to worry about that. You don't need to file all these information. So these all are available. So here is the option. You can see whatever your query, Mr. Whatever is your query regarding 10 IEA, that will be solved in ITR 3 or ITR 4, but you have to be just watch it out here. But I'm already response you, so I hope your doubt will be clear now. So this is there are so for individual in HUF, sorry, for a person who don't have a business and profession income, they have option. They are choose any and number of time they are choose whether old tax regime, new tax regime. There are no restriction on that. If you are a person who has a business and profession income, then there are some restriction on that. If they choose for old tax regime or new tax regime, there are some restrictions they have. Keep it in mind, and we will discuss at the time of ITR 3 and ITR 4. Now we will here discuss about ITR 1. So every year you have option to choose whether you go for old tax regime or new tax regime. And for the whatever is in red, that is mandatory field, you have to compulsory file. Otherwise, you have to be checked to estimate your total tax liability. You have to use income tax calculator. So this is the important point we already see. Are you filing return in income under seventh? So if your income is exempt more than basic exemption limit, then you can select the option. So whether are you filing return under section but not required to furnish return affairs, please furnish to be filed if income required one or more cent. So if you know what we already discussed about high value transactions. So if it is applicable in your case, you filing your return because of your income is more than basic exemption limit. I think little speed. I think little speed. Okay, fine. Okay. Little speed. Okay, I can do that. Okay, no worries. Fine. So so what I'm trying to say is like I hope you understand that you have option to choose old tax regime, new tax regime for ITR one. Whoever applicable for ITR one, they are option to choose between ITR for old tax regime and new tax regime every time, every year where they want. There are no restriction on that if you don't have a business and profession income. And the next point you have to understand that if you are filing return because of your income is exceeding basic exemption limit, then you can select and if you are selecting yes, then you can select yes, then you can select no, then you don't need to fill this form. And if your income is you have income, file your income because of high value transaction like your electricity consumption is 1 lakh or more, your foreign travel is 2 lakh or more. So that's the reason I'm told you about high value transaction. So you have to feed that information. It is applicable in your case, then you have to feed that information correct regarding the high value transactions, because it will be chances you will get notice because of that high value transaction. If it is applicable in your case, then you can keep it in mind. Okay. So these all are the detail you have to feed that. And aggregate of tax deduction. So if there, so all these points we will already discuss at the time of a theory part, that if it is high value transactions and your income is below exemption limit, sometime it is below exemption limit, then you have to be file your return because of these high value transactions. Then you have to feed that information additionally if it is required in your case. Email ID, your mobile number, filed in which section. So you have to select these all correctly. And now you can see this is the salary portion. Salary portion is these all are information generally when you already when you use the online portal, then these all information based on your 26 AS and AIS, all information will be already auto populated. You have to be just cross confirm, or you have feed some additional information like bifurcation of all this, like basic salary, HRA portion, or all bifurcation you have to be declare in salary part. These all are auto populated at the time of filing, so you can do that. And now you can see this is exemption list. So these all are, you can see whatever, if any exemption under section 10 is applicable in your case, you can select that. Majorly this is not available at this is not in general this is not allowed, but it is applicable in your case, like gratuity, allowance and requisite, outside country. So if you any exemptions applicable in your case, you can select that and feed that amount. If it is already included in your income, that part is reduced, and accordingly you can do one thing. Okay. And this is important, you have to understand that this is big changes in HRA allowance. This is allowable in a maximum case. HRA allowance is a you have, as per income tax provisions, you will get as per income tax provision, you will get three of the least 40% or 50% of your basic salary or actual rent received, and minus 10%. So based on that, the amount will be calculated. And now we already discussed additional detail will be ready and required, where what is the address of your rented house, and all these additional detail is required. So you can click on that. Now in Excel utility it's not available, but you can, when you file your income tax return on income tax portal, then you have to be additionally with ready with additional detail which we already discussed on theory part. You can click on that, and then you have to be feed that information And then relief under section 89A. This is for this is for available for non-resident, especially for non-resident. They earn income from this is for no, sorry, this is for resident only, but the rebate will be available if you earn income at the time when you are in when you are a non-resident, and on that income, if you earn income in current year, so that is not applicable. The rebate is allowed under section, like if you earn income on that time when you are actually non-resident, you earn income from like foreign asset. If you have any foreign asset and that is earned at the time when you are a non-resident, when you are non-resident, and earn income on that, that is not taxable in current year. There are separate provisions for that. They have to be calculated at the time actually you get in India. Actually, you if it is a actually, if it is not taxable and it is, you can get benefit relief under section 89A. There are some treaties with some countries. Based on that, this relief will be available if you have any income which is actually earned at the time of when you are a non-resident. So if this is applicable in your case, then you can feed that information. Now you can see this is a type of house property you have. So you can select it, self-occupied property. So if you select you have only one house and you are definitely you can opt that that house is self occupied. So choose that self occupied property, and then you have to whatever gross, then your gross rent received is zero. Now you can see if it is like 99% chance you not do not treated as a let out or deemed let out in ITR 1, because ITR 1 is applicable only you have one house property. So this is always a self-occupied property in when you choose for ITR 1, then you can put zero over here, and all the you can see that that is not in available, that is not actually required at the time of ITR 1, but you can see that this tax paid to local authorities, 30% of that amount will be treated as ad hoc deductions and interest payable on borrowed capital. So here you can see that if you have a you have a self-occupied property, but you can take loan on that. So interest portion will be deduction of interest portion will be available, but you have put some additional information, as we already discussed, additional details and documentation required. So that's why this is a linked form. You have to click on that, and then one additional schedule will be open, and you can feed that information. As we already discussed, the additional details and documentation required. So ready with if you have any house property and that any loan taken on that, then you are ready with additional information, and some areas applicable in your case, you have to be feed that information. So especially it is very important, you can feed that information even if you have a self-occupied property though. So there are chances that your house property will be negative. So like if you have own house property that is self-occupied, but you have taken loan on that property, that's why you have to pay rent on pay interest on that, and maximum up to 2 lakh of your interest will be treated as your negative house property. So there are and that negative house property will reduce your tax liability resultant when you consider all the heads of income. I hope you understand that the maximum limit is 2 lakh. So it will be beneficial for you, but it is also understand that self-occupied property interest available only if you opt for old tax regime. So it is also part of your deduction and exemptions for old tax regime. So please keep it mind that as well. It is when you calculating when you choosing between old tax regime and new tax regime. And next is income from other sources. So feed that information, whatever income match with the 26 AS, AIS, and whatever documentation you have. And based on that, you can feed correctly all the information. Actually, you can get these information from auto-populated, but still you have to, if anything is not mentioned, then you can feed yourself. And that's the way you can feed all the information. And here you can see also you can see this is all that you have to be filled in this is all for 89A. This is already we discussed what is that cover. Now if you are opt for old tax regime, there are option whether if you opt for old tax regime, then these option will be open for you. You can feed that form. ATC, ATCC, ATCCD 1B. We already discussed that 1,50,000 is limit, 50,000 is limit, and this is allowable. Yeah, only this is our allowable. Even you are taking whether both old or new, whatever regime you opt, whether old tax regime or new tax regime, you can get benefit of ATCCD2 if it is in your case. This is for central government, and this is for another one as well. You can see. So if it is applicable for that, then you can choose for that. And ATD if you are off for old tax regime, and here also the hyperlink, because of that you have to feed additional information. You can, you know that there are deductions and exemptions which you are claiming from this financial year. You have to be feed additional information at the time of filing your income tax return. So please be ready before start. This is not required earlier years, but from this year onwards you have to be ready with additional detail which we already mentioned in study material. So you can get through it and keep ready when you start filing your income tax return. So this is all required at the time of ATD for this is also applicable only if you are off for old tax regime. It is if it is applicable in your case, then you have to feed all these information. These all are, and this is so this is acknowledged number form also required. So ATGG basically, if you don't have an HRA exemptions, and you have to, if you pay rent. So like if you have you don't have any only other sources income, or any sorry, salary income, but you don't have any HRA from your employer, then you can get benefit of rent, where ATGG rent, ATGG reduction 5,000 is a limit, 5,000 is a maximum. You can get exemption 5,000 monthly. So annually it is a 60,000 somewhere around. There are also a separate taxation formula for ATGG. So if it is applicable in your case, and for that, you have to file similar to 10IEA. One additional form is required before taking a benefit of ATGG. You have to be file that form and get acknowledging number and feed that information over here. Similar way, if it is applicable, whatever like ATGGC for political party, if it is applicable in your case, this is also for old tax regime. So feed that all information, and this is all deduction list, and this is exemption limit list. So here you can see the change which is we will discuss here. So this is all the agricultural income less than 5,000 only will be applicable. Agricultural income is a fully exempted. You also know that. So here you can select all the exemptions income all exemptions income. If you get that, then you have to feed that information. The PF refund received from employer up to 12% tax exempted. So all these detail you have to feed on in that form. This is totally exempted. That is not part of your salary, but still you have to report at the time of ITR filing. So here you can see this is the new point added. So you will see income on which no tax is payable, long-term capital gain under section 112A not chargeable to you. So this is the new point. You have to understand that earlier it is not allowed long-term capital gain under section 112A for equity shares and equity oriented mutual funds. So this is allowed for long-term capital gain. So this is so this is now this is the new point for ITR1. So you have to feed that information, sale value, purchase value, and accordingly you can calculate 112A long-term capital gain up to one. Actually, it is totally exempted, but still for reporting point of view, you can feed that information. Rebate under section 87A, we already discussed that. That is only for a resident individual. So if you are filing return for resident individual, then they can benefit of 5 lakh or 7 lakh old tax regime and new tax regime, and also standard deduction for that what we can see, that is salary part. We already that is covered in salary part, salary portion. So this is rebate for all 7 lakh and 5 lakh. So accordingly, after rebate, if tax liability will be, if tax payable after rebate, health and education says total taxes is, so these all are the limit, and the tax will be calculated accordingly. If we already discussed, if you not comply with advanced tax liability, then you have to be pay interest under section 234B, C, and these all are additional detail. Fee under section 235 applicable if you are filing return after due date. So these all are the details will be feed at the time of filing income tax return for ITR1. I hope you understand that. Any query you can put in chat box. We will discuss it regarding that. Okay. So now you detail of tax deducted at source from salary. So financial year 24-25, partner salary received, income received, share trading income received abroad, which form file in column no asset in abroad. You are saying partner salary received. So you are partner in some company. What are you trying to say? If you are partner, please put in chat box. You are partner. So partner ITR 3 completely. You don't need to see any other option. This is ITR 3 is applicable if you are partner in a partnership firm. Even if you are a sleeping partner, then also ITR 3 is applicable. I hope your doubt is solved. So this is all for TDS. You can see this is TDS portion and here TDS from salary as per form 16. So here these all are detailed. You can just cross confirm that and check it out. If you have more than one employer, then a different tab 10 number over here. Otherwise, only one. If you are only one employer during the year, then these all are information. You can cross confirm it. It's already pre-filled data. And other than salary TDS, so here also a big changes. Earlier it was just total TDS amount. Now you have this additional section required, and you have to select that on which section TDS will be deducted. So this earlier it was not required, but now which section, what amount of TDS deducted in which section, you have to be feed that information. And these all are the detail you have to be feed that year of tax deduction. So these select year and tax deducted and claim this year. So these all are detail you have to be match with form 16A, and these detail will be this is all TCS required. If TCS will be deducted in your case, then you can see, and accordingly this is all a part of your advanced tax liability. And if you pay any tax, please cover foreign assets and ESOPs. Foreign assets and ESOPs, you want to cover that. But this is not applicable for ITR 1. We will discuss in later part. So this is, we are talking here for ITR 1 only. So we will discuss in because ITR 1 is not applicable for foreign asset. I hope you understand that. Or even ESOP is, if you are getting ESOP, then also ITR 1 is not applicable. I hope your query will be solved, Mr. Ganesh. We will discuss that. Definitely, we will discuss taxability on foreign asset and ESOP for for a non-resident point of view. Whether you are if you are a resident also, and if you own any foreign asset, then also you are not able to take in ITR 1 itself. And also you can see another eligibility criteria as well. So if you own foreign asset, and if you don't, if you have any other business and profession income, then also you have to go with ITR 3 or ITR 4, not ITR 1 and ITR 2. I hope you understand that. Okay. So we will cover, definitely we can cover. So these all are part of TDS, and similar weight is TCS. And you have to just cross confirm all these things. And now this is all your return, filled return form. You can see. And just cross confirm all the detail, verify it. And now what you can do, if you are using Excel utility, then you can so you have to just click on the calculate tax and liability to pay tax, and click on e-pay tax, then create a challenge, pay tax from there are also pay tax on that. And there are option available in income tax portion. You have to pay tax on that. And then that amount is not automatically shown in self. We are already seeing over here. You have to bus that, you have to feed that information or from your side, and then based on that you have to feed that challan number and all these information, and then calculate tax, and then import that form, and import that validate form, and then import that form, and export over income tax portal. and accordingly you can file your return. So I hope ITR 1 is clear. And now we can understand the concept of ITR 2 when it is applicable and what is the point cover over there. Okay. So we will do one thing. I can go for theory again. Okay. So now we will discuss for ITR 2. ITR 2 is applicable to individual and HUF, including NRI, who does not have business and profession income. So if you have business and profession income, then you can choose for ITR 3 or ITR 4. And if you don't have business and profession income, if you are an NRI, then you can choose ITR 2. So if individual and HUF not eligible for ITR 1, does not have business and profession income, then they are choose ITR 2. And capital gain income other than long-term capital gain under section 112A up to 1.25 lakh and does not have business and profession income, then ITR 2 is applicable. If you have more than one house property and does so, we already discussed all these things at the time of ITR 1. So if it is one house property only, then you can choose for ITR 1. And business profession income is completely if you have business and profession income, then you are go with ITR 3 and ITR 4. ITR 1 and ITR 2 is not applicable. We are talked about here for individual HUF and NRI sometime. So this is the point. ITR 2 is applicable. Such individual and HUF is not partner in partnership firm. Receive anything from partnership firm is treated. Such individual and HUF is not partner in partnership firm. Receive anything from partnership firm is treated as a business like income. And so individual is not partner but receive anything from partnership and treated as a business income. So as already we will discuss this as well, we will cover in study material as well. So you if you thorough with this study material also, then many of your doubt will be resolved. Rebate under section 87A is available only for resident individuals, and you can claim maximum 2 houses as self-occupied subject to some specified condition. We already discussed that, and I already put over here. So I am trying to put all the relevant relevant points and relevant practical aspects in theory part. So when you go through it, so your maximum doubt will be resolved, and otherwise we will here to solve a query. That is not an issue. So that is the thing. If you so the maximum 2 house is treated as self occupied. If you own more than 2 house, then definitely you can that is deemed to be let out property and you have to pay tax on it. Okay. Generally, transfer means sale, but under capital. So I already told you that as per income tax provisions, capital gain that there is also not just a sale. That is also covered transfers, exchange, relinquishment, compulsory acquisitions. Client having 3 income, all are rented while filing 2 exempt, and one can show as rental or all 3 homes we show rental. No, no, no. No. If you own 2 or more houses, you can take 2 houses as a self-occupied, only one, which is more, the tax will be calculated. Like if you actually they are rented, then you are treated as a rented. But if it is actually self-occupied, in some reasons, there are no rented actually. But as per municipal tax rate of that, so whichever least municipal tax that will be treated as a let out. It is always advisable and it is always beneficial for client. I hope your query will be resolved, Mr. Balaji. I hope your query will resolve. Only one will be treated as a let out, and which is least municipal tax rented value. You can opt for that. That one we have to show on ITR 1 or ITR 2. Definitely. If you own more than one house property, then you can go for ITR 2. If you don't have business and profession income, you can go for ITR 2, not ITR 1. ITR 1 only when you have only one house. If you have more than one house, you can go for ITR 2 or ITR 2. Okay. If you don't have business and profession income. So this is all the required, and whatever. So other than business and profession, all heads will be covered in ITR 2, whether you have, and this is also for NRI as well. So as they asked for foreign assets and what is this asking? Foreign assets and ESOP part as well. So actually, foreign assets and ESOP is basically you can get. So here, if income is more, here if but the person don't have business and profession income and they can get ESOP from their employer, then it will be high chances that they will choose for ITR 2. So for this, you have to understand that ESOP will be tax at whatever amount you get. You know there are vesting period in ESOP. There are 5 year vesting. Many of the company has a 5 year vesting period. So whatever vested in your account in this year, and whatever in what amount you will get and what is the market price of that, based on that there are criteria, and based on that the tax will be then you have to be paid tax on that. And it will already cover in your form 16 as well, for ESOP part. I hope you asked that only, Mr. Ganesh, or you are asking something specific. You can please put in chat box, so I have clarity. I have resolved your doubt related to foreign asset and ESOP. So you can put in chat box. We will discuss it. Okay, fine. So this is for ITR 2. So now what we will do, ITR 2, we will do theory for ITR 2, and this is now take a overview of a practical part as well. So for that, I will do one thing. Again, share my screen, and so please confirm. Can you see ITR form or theory part? Please confirm. Anyone can confirm? Okay, sorry, folder, we can see it. I So I hope you can now able to see ITR 2 form. Okay, fine. Okay, fine, 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 fine. So this is ITR 2 form. You can see this is huge form. ITR 1 is simple form. There are only 3 tabs over there, but now there are all the heads will be all only other than house property. Sorry, other than business and profession, all head will be applicable on ITR 2. So that's why there are so many requirement over there. Fine. So you can see this is ITR 2 form. And when you start filing on income tax portal, then you have to select the schedules, whatever applicable in your case, you can select that. Here in Excel utility, it's quite difficult to choose that. So that's why I will cover all the points. So it will be always helpful for you. So I'm trying to cover all these maximum point which will be applicable and which will be required and which will be commonly required. So it will be helpful for you. So this is the schedule, and at the time of filing your ITR, you can choose that you don't need to thorough with all the schedules. You have to select whichever applicable in your case. But here I will cover all these. So mostly is a common, as we already discussed in ITR 1, you can import pre-filled data, and the detail will be available over there, and then you can feed that information. And here also we will forget to discuss one thing, that there are also changes in earlier years. Also there are allowed to Aadhaar enrollment ID, but now already only Aadhaar number is available. You can only put Aadhaar number. Now enrollment ID is not allowed. So please keep in mind, if you don't have Aadhaar number, you only have an enrollment ID, then you are not able to file your return. You can get your Aadhaar number as soon as possible, whatever for your client. So you can do that. So this is for, you can see this is ITR 2. And here you can feed all the basic mandatory field. You can see once this is the same one and the same thing for non-business, other than business and profession income, they are option to choose every year, yes or no. And the portion, this is also the same. If you have high value transactions, then select that and accordingly feed that information. Otherwise, completing the see, you can see this is for enter the Aadhaar number applicable to individual only. So here Aadhaar, earlier it was allowed Aadhaar enrollment ID as well, but now it is not allowed. So feed that information. So do you want to so this is the information, and this is if you are a, especially it is applicable only if you are a Portuguese civil code is applicable for Goa persons. So if you are a Goa resident, then you can select that their tax liability will be different. But here we are select no. You can select yes if it is applicable in your case. There are some difference in taxation liability. So if you have any SEBI registration number, then feed that information. If you are FPI, then you can select FPI is like foreign investors. Then you can select yes, and sorry, FPI is for if you are FPI, then you can select yes, and if yes, provide SEBI registration number, then feed that information. Representative assessee, the name of the representative assessee, capacity, and all these information can be feed. And if you are director in any company, so you know there are also eligibility criteria in ITR 1 that if you are director in any company, then also you are not able to take ITR 1 benefit, even if you don't have business profession income, but still ITR 1 is not applicable. If you are director in any company, then you can choose for ITR 2 only for if, other than business and profession income. Then you can name the company, type of company, PAN number of company, or DIN number of that. All this information will be required if you are director in any company at the time of ITR filing. And this is a huge person who has a refund is 50 crores or more, then he can get a LEI number. To detail of that will be required, and when will be applicable will be required. You have unlisted equity share at any time during the previous year. If yes, please furnish information. So if you have any unlisted equity shares, then you can feed that information correctly. If you hold any unlisted equity shares, there are also big changes in that portion as well. Earlier, it was an angel tax applicable on some unlisted equity shares, but now completely angel tax is abolished. So it will be beneficial for the company as for an investor as well as company point of view. So this is also good news, and this is for Schedule S, that is detail of income from salary. So this is one and the same thing which we already discussed in ITR 1 portion. All information will be already auto-populated. You can cross-confirm and feed that all information. And you can get whatever is applicable in your case. You can feed that information, allowances, and all these things. What is in chat box? Who will file 10 IEA? Basically, 10 IEA for ITR 3 and ITR 4. ITR 1 and ITR 2, you don't need to worry about I-10 IEA. If you are able to choose ITR 1 and ITR 2, then you don't think about 10 IEA. 10 IEA for business person only. Yes, she said yes. Okay, fine. Okay, I hope you understand that. So this is all is you see, this is all same and one and the same thing which we already discussed. There are nothing new. So you know there are, you can see this is the place of work, actual HRA received, actual rent paid, detail of salary, actual rent paid. So this is all HRA calculation, place of work, where earlier it was not required, but now it is compulsory feed. You can feed that information, and for HRA calculation. So especially place of work and all this is required. And now you can see this is standard deductions. A new tax regime is 75,000 and 50,000. It is all automatically you can get that at the time of ITR filing. So this is all the information, professional tax and all this entertainment tax. I was moving to railway station catchment, so I could not respond. If please is possible, please give a demo of filing return with ESOP and foreign assets. I don't understand what are you trying to say, but filing ESOP is basically you can get ESOP if you are. I think you are do one thing. You can put your query in tomorrow's session. So it is good for you whether your doubt will be solved or not. I hope you understand, Mr. Ganesh. We will solve your doubt tomorrow in sessions. Okay. So this is all is required. And now is a house property. So house property earlier in last you can understand that we will see that is only ITR 1 is ITR 1 is only for one house property. So if you own more than one house and you don't have a business profession income, then there are more than one house, then you have to be feed that all information. So compulsorily now more than two you have to be deemed let out that property. Now you have to be feed that all information. You have to select state, country, and all these information. If any co-owner, then detail of the co-owner, Aadhaar number of the co-owner, PAN of the other co-owner, or your own, your is available, but you have to feed other co-owner detail as well, type of house property, and tenant, PAN of tenant, Aadhaar of tenant, and then you have to get 30% of your 30% of your whatever salary you receive, that 30% will be allowed as an ad hoc deduction, and you have get 2 lakh as 2 lakh as self-occupied property interest. If you have let out property, then definitely more than if you're more than 2 lakh income as well, then you can get benefit of it as. So this is but self let out property, you can take benefit of interest payable on borrowed capital more than 2 lakh as well. But now this is limit for 2 lakh only. But for self-occupied property, you can take benefit of up to 2 lakh only. So interest on borrowed capital. So this is all information will be one and the same. You have to understand that this is the feed all information, whatever applicable in your case, and nothing new in this, which we already discussed. You can go through it. If any query regarding this, you can definitely ask query. Okay. Now capital gain. This is the capital gain head. Under this head, you can put whatever type of capital asset you sold during the year. So detail of all these will be put over here. Fair value, value of stamp duty as per this reduction under section. So this is all information for land and building. Indexation will be allowed. So that's why this is the section for indexation as well. Or you sold before and after date. So put all the information, and date will be important, right? To from this year especially. So please mention all these dates correctly. So calculate proper tax rate. So feed all information if whatever applicable in your case, it is short term, long term. Already we will discuss all in theory part. So this is all practical. You have to feed that information. And I'm already told you that whatever information whatever you sold 30 before 23 July, after 23 July, then the date will be mentioned is compulsorily required. And now some additional information will be already also asked. Aadhaar number of buyer. Send these field that information. So here you can see this equity shares for before 20 on and after 23rd July and before 23rd July. Feed that information properly. For that you have get demat account balance, P&L balance, and feed that information properly. And this is also the thing you have to be do that for this is for you know what, this is also important to understand that we already discussed about pass through status, the like business trust and certain other they can get exemption under section 11. So that's why they whatever income they earn directly calculated for investor part. So if you have any investment in business trust or any other trust, so whatever income earned from them, it is directly calculated, directly come to the picture of investor. That is completely exempted under section 11. So that's why they are required to file ITR 7. We will discuss that as well. So whatever income earned from that business trust is will whatever it is short term, long term is on holding. So here this is come over there if it is applicable. You will get all these information from 26 AS, AIS. You can just cross confirm whatever documentation in your hand. So this is majorly information is will be auto populated based on AIS and more than house property filled each house income separately. 7 house have. So if you have more than one house property, field each. Yes, definitely. You have to be field definitely all the houses details. Seven house have, then you have to fill all the information. You can add that. You see there are option for add. If you want to add more houses, you can add. There are option for add block. You can add that and feed that information. This is the one and the same thing. You have to add that information and accordingly set let out self-occupied any loan on that property, any interest applicable on that, calculate it. That is a 30% deductions. Any municipal tax will be written by you, and 30% deduction will be calculated automatically. Yes, you have to be add that block, and accordingly you can feed that information. I hope your query will be resolved. Sorry, this is capital gain in house property. You will do that. Add property. Yeah, is option for add property. So here you can add property option and how much property you have and number of property you have to feed that information. Otherwise, this all information will be based whatever. If you are not claiming over here, then so here or where the information will become in picture at the later stage, and it will be huge and huge interest and penalty. So that's why it's always advisable to add it at right time and properly feed that information and claiming as deemed let out. So I hope you understand that and your query will be resolved. And so capital gain will be mostly covered, and that's the way you can cover, and you can ready with all the details when you buy and sold, and you can feed that information properly. And this is also important to understand. This is one change that earlier buyback of shares from 1st October 2024. If you any buyback of any if you received any money from buyback of shares, that is treated as your income from other sources, and whatever is the cost price of that share will be treated as a capital loss. So here is the amount you can see capital loss on buyback. So whatever, like suppose you have purchased 10,000 rupees of shares. So that 10,000 will be treated as a capital loss, whether it is short term or long term, whatever is based on holding. Salary person having F&O income of share can file ITR. No, if you have. So Mr. Balaji is already solved your query. ITR 3 is required. Yes, so that's the true thing. So now you can see this is the part you have to understand that this is important. Buyback of shares. So on or after 1st April 2024, if you are buyback of that shares, buyback of share by that company, then that is treated as your income from other sources. Whatever amount you receive, whatever amount you received is treated as a buyback of shares, and whatever is the cost price is treated as your cost. Capital cost is treated as a capital loss, and you can settle with the other capital gains. I hope you understand. This is also big change, so please keep in mind if any buyback during the year. So please do it rightly during year 24-25, especially after on and after for 1st October 2024. It is important for buyback of shares. So if it is happen in any of the client case, so please keep it in mind. Okay. So this is the all information, and this is the all thing you have to be read. Whatever applicable in your case, you can feed all information. And this is all auto paper inform, and all the other thing will be automatically concluded. What is saying? What is the tax rate for buyback shares? So basically, there is not tax rate. This is slab rate. You have this buyback, whatever amount is you receive. Like I'm giving you example, like 10,000 rupees of your shares, and the buyback price is 15,000. Suppose 15,000. So 15,000 is directly going to income from other sources, and it is as per slab rate. Yes, yes, yes. Okay, fine. You understand it. So as per slab rate only, but whatever's in slab you can go through, that is added. This is our income from others. You can feed that information in other sources, and then the cost will be in this capital, treated as a capital loss, and you can settle with capital profit any. Okay. whether it is short term or long term. So you can feed, and this is all auto populated information. So this is done from capital gain point of view. So this is for schedule 112A. Schedule 112A for long term capital gain, long-term capital gain from equity shares and equity oriented mutual fund. So here also, there are also the big, so there are also one change which is from 31st January 2018, when earlier long-term capital gain from equity and equity oriented mutual fund is completely free exempted from before this date, the 31st January 2018. So this is also important. You have to, because up to that date, if you purchase any share before that date, then up to that date, that is taxable. You don't have to pay tax after, and whatever is the fair market value of that date will be treated as your cost, and the balance will be balance of that your sale price, and the market fair market value of that 31st January 2018 will be your cost price. This is also important to understand, and based on that, your will be you have to calculate your rate. So any query regarding this, you have to be asked. And the rate will also, yeah, here you can see that 23rd July, the rate earlier it was 10%, now it is 12.5%. So based on that, rate will be calculated. Schedule 115 AD applicable for non-residents only. So from sale of equity share or equity oriented. This is especially if you are filing income tax return for non-resident, and they can get income from share equity shares, equity oriented mutual fund, business trust, and then they have to file. Otherwise, it's not required to file. It is for a non-resident only. So if it is for an other than non-resident, they can file under section schedule 112A, and for other and for that non-resident, they can file in 115 The information is required to file in way. Okay, and this is schedule VDA for virtual digital asset. That is VDA. So this is for cryptocurrency. This is cryptocurrency. So they are taxable in cryptocurrency as well, and this is taxable under capital gain head. Even if you are received in gift format, then also the cost will be treated as your previous owner, or taxable under income from other sources if you received in gift, and based on that, cost to premiums on its owner, and accordingly the tax will be calculated on it. So you have to feed all information for cryptocurrency as well. It is a taxable under Income Tax Act, and other sources you have to be feed all information. This is under other sources. You can feed all information in other sources, and this is dividend income. It is all auto populated. You can cross confirm from 26 AS and AIS. It is already taken all information from there. But if anything is not mentioned, you have document for it. You can feed that information. Otherwise, you can just cross confirm it. So you have to do that. It's nothing new in this. You can just cross confirm from that. Deduction under section 57, family pension deductions under section 57. So it is applicable in your case, 15,000 will be limit. So put that in out. And this is also allow under old tax regime. So accordingly, if it is applicable in your case, then keep it in mind at the time of ITR filing. And this is all information you have to be feed. That if you have earned income from lottery, this is also ITR 2 is applicable. So this is all information you have to cross check it and feed that information accordingly. Okay. And now you can set off for your income. Set off for your income. You know what? This is all already auto calculated. You don't need to. If VDA transaction is difficult to show stock item. Client don't know when he purchased and sold, how to get those data. So basically, when he purchased and sold, how to get those? This is not available in their software. I think their software will be available of purchase and say similar to share transaction. There are also available some transaction history in their particular app, in which app they deal. I think so. There in their app they have a option for P&L transaction, and just like Demat account. They don't have option. Original. Okay. Original. Okay. They don't have option for regarding this. It's fine. Okay. Fine. We will look out in this because in some time it is available. But if it is not available or what to do, this query will be resolved tomorrow session. No worry, we will discuss it. Whatever is because according to my point of view, this is available at the time of in software itself. But if it is not available, what we will do, we will think about it and let you know. Okay, we will discuss tomorrow if it is not if it because in my knowledge it is available, but it's not available. So what to do? We will think about it and let you know. Okay. So I hope your query will be resolved. We will discuss in tomorrow's session. This is also we will discuss in tomorrow's session. Actually, the session is already extended, but what we can do, we will cover ITR 2 and the remaining portion. So as soon as, because 6:35 is already 6:35 and tomorrow we will try to, because today in theory part all time will be gone, but tomorrow there are very few theories less. Now we will discuss all practical idea 3, 4, 5, 6, and 7. So we will discuss tomorrow all the ITR forms practically and all your queries, especially regarding this, because this is also the VDA is also covered in idea 3, idea 4. This is all cover in that part as well. So we will discuss on that time. So if they don't have any option for that particular transaction wise, because there are need of that. So how to be resolved date of acquisition. But here they are not asked for single script. I think they are asked for cost of acquisition and cost of acquisition and consideration. They are not asking for a single script. I think what are you trying to say? Why we need for what is I hope your query will resolved, Mr. Balaji. I don't understand. What are you to heading read every transaction detail? No, and not every transaction detail. You have to just feed. No, no, no. Okay, fine. We will discuss in tomorrow session. Okay. Detail of every transaction are to be filled, wherein every transfer is a transaction. No, I don't think so. It's required even in equity shares or shares also there are also not a script wise. They can there are not requirement of script wise in equity shares as well. Date of acquisition, date of transfer. Okay. Okay. For equity share, for that, it's actually difficult. Okay, fine. We will get through it and let you know in tomorrow session. We will get through it and we will let you know in tomorrow session. Okay. So let's finish schedule. Let's finish share because it's already running time 6:38. So we will finish this and we will definitely cover this VDA portion. And tomorrow there are two tasks we will discuss in tomorrow session. So we will cover on tomorrow session. That's not a very issue. So we will finish it out. Okay. So this is outsourcing and this is already auto-populated and losses to be carried forward and deduction under chapter 6A. So this is already we discuss all these and this is all auto populated. Whatever information you feed and will be shown over here only. And this is income of specific. So this is clubbing provisions. So if any income is clubbed with you because of clubbing provision under Section 64 of Income Tax Act, where for your spouse, your minor child, your son's spouse. So if anything applicable in your case, then you can feed that information considering Section 64 of Income Tax Act, and name of the person, pen of the person, Aadhaar number, relationship, and amount, head of income in which is, so here whatever income, whatever type of income, whatever head of income, based on that tax will be calculated. So if you are doing anything, any clubbing provision will be applicable in your case, then you can feed that information. And then tax on recognized income chargeable tax at special rate. So they are taxable in different, generally it is slab wise rate for individual and HUF, but some specified income that is taxable under special rate. So we will, and this is all already auto populated. There are no need to worry about that. And this is the provision of AMTC, that is, we will already discuss about what is that. So basically, if after considering deductions and exemptions under income tax provision like SCZ provision and 10AA section exemptions and additional any other special deductions allow, then your might be possible that your income will be not taxable at all. But because of the provision of AMT, after adjusted these income with special reductions allow in income tax provision, which is not allow in as per accounting standard and all this, but after added back, then that amount you can get specified percentage of that will be paid as your AMT. Similar to earlier, it was only in the Companies Act, that is MAT provision, but now but now it is also AMT provision will be applicable other than non-corporate OCC as well. So you have to pay 80, 50, you have to pay tax on that portion, adjusted income, and the remaining adjusted income. So if your income is more than actually you declare in as per income tax provision, and you can get credit of that, you will carry forward that credit, and you can get adjusted in future year as well. So I hope you cleared the understanding what is AMT provision. It will be auto calculated. You don't do any calculation regarding this point. Already you feed that information, what deduction you allow as per Income Tax Act, and what is required to add it back, it will be automatically added back, and accordingly AMT will be calculated. I hope you understand that. And here is detail of exempt income like agriculture income and agricultural deduction law in this set, and name of district, pin code. So it is applicable in your case, then feed that information. Pass through income, we already discussed about that. This business trust or investment trust. So if you have any pass through income, so it will be calculated in particular head only. So, and that business trust and investment fund is treated as a exempted under Section 11, then they are liable for ITR 7. So whatever income earned by them is directly going to investor, and like they have a, if house property income, then house property investment in house property only, REIT, REIT. So that if investment in that, then it will be taxable in house property only. This is auto populate, go to particular section, and accordingly calculated can be done. So I hope you understand this provision as well. And this is what I don't. This is also for foreign transaction, foreign companies. So if it is applicable, so you can feed that information. This is also for tax lien claim for paid outside India. So if it is applicable in your case, so you will feed that information. That is especially for if you are doing any transaction and paying double tax in both the countries, but cross-border transaction, then that provision will be applicable in your case. And you have to feed that information in taxpayer number, taxes paid outside India. You can claim DDAA relief. So under Section 9090A, so it will applicable in case. Then you feed information. This also for this is especially if you are a governed person and filing income tax return, then there are some different route for taxable point of view. So applicable on that only. And this is requirement. This is also change in budget 2024. If you have income more than one, earlier it was 50 lakh, but now if your total income considering all heads of income is exceeding 1 crore, then compulsory you have to feed that form. Otherwise, you are not required to feed that form. So whatever assets and liability you have to feed all information detail of your all movable property, immovable property, and feed that information. So if you earlier it was 50 lakh only, but now if your income is more than 1 crore, then you have to feed that form. Otherwise, no required to feed that form. I hope you understand that. And now it will be calculated all your tax liability. And yeah, if you pay any advance tax and self-assessment tax, then you feed that information, validate your return, generate JS on, and feed that form. So it's already 6:45. Tomorrow we will cover remaining all ITRs and along with the cryptocurrency, the point of cryptocurrency, which we asked by which asked by Mr. Balaji, and also the Dow and also ESOP will also cover. But what he trying to ask, I don't understand. But we will discuss that as well, ESOP point of view as well. So so I hope all your doubt will be resolved. Any query, any other than these 2 points, if you want to ask anything else, you can comment in chat box, and then we can stop this session. Please, any if you want to, if you have any query, you can ask it. We will focus. ESOP issue by company and let this you can cover. Issue by company and later sold. Okay, ESOP point and the cryptocurrency point. We will discuss in tomorrow session. And also we will discuss some important ITR 3, 4. ITR 3 is quite interesting. And ITR 6 and ITR 7, we will cover all the ITRs in practically whatever important and specific point. And any other point you want to, you can put now, or you can keep it mind. You can hold yes tomorrow session. So we will discuss. Okay. So we will try to cover all these in tomorrow session. So thank you so much for patient listening. Okay. Thank you.